Hi guys, I'm Karunya Rao, and in Ideas for Profit we tell you why Shakti Pumps is an attractive investment bet. Despite issues and restrictions related to lockdown as a result of COVID-19, Shakti Pump continues to post strong growth led by recovery in the solar pump market, strong government focus and orders in hand. During the second quarter of the current fiscal, the company reported a solid 84% YOY growth in revenue, led by pickup in the domestic market. Moreover, its EPC business and exports also saw sharp recovery as a result of easing COVID-led issues such as logistics, vendor availability and manufacturing on ground. While revenue recovery was good, the company saw some pressure because of higher input cost. Part of its pumps are supplied at old rates and that created pressure on the margins, which the company believes is to the extent of around 10%. However, the net impact is considered to be of about 6% as a result of its efforts to cut cost, better R&D and value addition. During Q2 FY22, EBITDA margins came in at around 9.3% as against 15.3% last fiscal. Thankfully, on a net basis, part of this pressure on margins was compensated by lower tax as a result of lower applicable rates, leading to 36% YOY growth in net profit. But the key thing to note here is that the pressure on margins will remain both on account of input cost as well as competition. The company's biggest market and scope for growth is contingent on huge opportunities for solar pump due to the government scheme of installing close to 4 lakh solar pumps under the Kusum Yojana. So far, only about 1 lakh pumps have been installed and the scheme as well as ordering have got delayed by about 6 to 7 months because of COVID. But despite that, the company hopes to achieve 1500 crores revenue in the current fiscal against 929 crores revenue last fiscal. Shakti Pumps is primarily banking on 300 crores worth of orders in hand and 250 crores order coming in from Uganda as well as some orders coming in from Kusum scheme towards the end of this fiscal. Even if it does 12 to 1300 crores of revenue without major ordering coming in from Kusum, it will still be good. But in FY23, the market is expected to bounce and Kusum ordering should be in full swing, taking the revenue to even higher levels. So far under Kusum, only about 75,000 pumps have been installed. The next tenders are expected to be of about 4 lakh pumps, and if the company maintains its current market share of 40 to 45%, that would open up huge opportunities. The company has seen a strong recovery in earnings from a negative EPS of 7.7 in FY20 to 41 per share in FY21. This also reflects in its share price, which jumped from a low of 120 rupees in March 2020 to the current market price of nearly 729 per share. Considering that the earnings remain stable and revenue visibility is high, the stock still offers good opportunity. Do remember that valuation of about 12 times its FY23 estimated earnings are still attractive.